Here, I'm Dr. Gloria Lattimore Peace, host and producer of OmniU Presents the H3O Art of Life show. This is a continuation of the show called Making Money Make Sense. In the first part of the conversation, we were exploring the depths, the breadth, the height of this massive topic which has no bottom, is fathomless, but we decided that we had enough expertise, at least I decided I had enough expertise in the studio to at least attempt to get to the bottom of some of the questions. And now we're going to go further and deeper, and my guests are the same guests, Karen Everhart Miller, tax expert, and Raymond Akins, who's not looking at me.
I'm sorry.
Former investment banker.
Yes.
I just want you to smile at the audience.
Thank you.
And Karen said something very interesting, and I told her she had the floor. So I want you to just have the floor and tell the audience what kinds of things that we need to consider right now.
Well, we're talking about social engineering through the tax code and the taxes. And people often think of tax reform, let's just make it simple and do a flat tax, but that causes troubles with all the social engineering and the social things that the tax code does. Now, if they went and canceled out the charity, and they're not talking about canceling out the charity, but there would actually be a large portion of the country that are not going to be making their charitable donations quite as much as they were because they're not getting a tax bracket on it. And that would actually cascade down and hurt the organizations that are receiving the charities. So instead of the government having to contribute to the social stuff, they're letting people contribute, take the tax breaks, and then that way the charitable organizations are taken care of. But there's a lot of things that the tax code, they want to tweak this in the economy, they want to tweak that, they change things in the tax code. The whole thing with the different tax rate for capital gains dividends is getting people to invest money in stocks and bonds so that they can get a lower tax rate, but then that means you're investing in the capital and the businesses in the country. And when they make it up to ordinary income tax, the investment falls off, so when they give you an extra tax credit, the investment comes back. Some things are very near and dear to a lot of people's hearts, and when they tweak the tax code, it causes a lot of stress on a lot of people's lives. One of the things that's kind of my nemesis is the earned income credit, because the earned income credit is supposed to be encouraging people in the lower income brackets to work, and it would basically give them back their income tax and their Social Security taxes. So it's actually giving them back Social Security taxes that means the government's got to put it in for them so that it's there when they retire, but it's giving it back to them. But now, depending on the number of children you have, it's actually turned into a welfare program. You can actually almost get back $5,000 for only making about $18,000 or $20,000 worth of income, and a lot of families count on it. But because it's such a big number, there's also a whole lot of fraud and misrepresentation by people because they're learning, you tweak this, tweak that, I can get more income. There's even people out there that are claiming they're starting their own self-employed business because they can say, okay, I'm cutting hair and I'm getting imaginary money, but I give it a number and they've got it down so they can actually get some money back from the government for lying on their tax return to say they have a business just to get money. And the IRS is well aware of the problems with this, but when they go to Congress to say we need to change the tax code a little bit in terms of what needs to be done with this kind of stuff, Congress says, no, we need this method as a social welfare program disguised as a tax benefit. So it's social engineering at a high level.
Okay, I'm thinking about the first part of the title of the show called Making Money. Now, making money means that. It means that you have to make money. And Ray is suggesting that you have to make money the best way. He didn't say you have to. The best way to make money is becoming an entrepreneur so that you do, in fact, make money rather than just earn money after you have built somebody else's entrepreneurship. So that when we think about making money, this person, this example that you gave of somebody who's saying that they have a business, that they're cutting hair, and this is the amount of money that they earned, and they now want to get back an earned income tax refund based upon a business that didn't really happen. That's small potatoes. That's peanuts compared to the way that corporations make money. For example, when I think about pharmaceuticals, you know, when you hear these examples of a product going from maybe a few dollars to several hundred or thousands of dollars simply because they can decide what the price of a product is going to be, and nobody can regulate that. Is that social engineering too, where you actually, sometimes you have the lives of people in your hands. You know, in other words, with this device for reversing ODs when people overdose, it's a device that can be used to rescue them from the
overdose,
the certain death from the overdose. It's not affordable, you know, and it's not always for people who have drug problems from addiction, but it is sometimes for people who have allergic reactions and other kinds of things where if they're not able to afford to have this device, they can't, their lives are lost.
Yeah.
So
in one case, you're talking about the EpiPen, I think.
Okay. Yeah, that's right.
Yeah, for people with allergies.
Right.
That price, it was jacked up enormously.
The little guy, and I'm not excusing illegal behavior and making money illegally. That's not what I'm saying. But the little guy on the corner who was, making up a way to make a few dollars pales in comparison to these giant corporations who sell products made in other countries for cents and bring them here and sell them for hundreds and thousands of dollars. We have that too. We have people who are making money because they control the market.
Right.
And so we're talking about making money in the context of people who are masters at making money, capitalists who are masters at making money. And we are in this same system with these people who are making money. Now, how do we also make money and remain legal in the same environment where we are being exploited?
Well, in the turn of the century, the 1900s, about 90% of the population was self-employed, doing their own business, running their own stores, and only about 10% of the population worked for other people.
Right.
This day and age, it's exactly the opposite. It's 90% of the people are working for the companies, and only 10% are running their own businesses and working for themselves, because it's easier that way. They kind of got into, I can go get a job, I can work for this guy and have a set income. They don't have to think, they don't have to worry about the ups and the downs of the business, but it's also hurting the economy. And then you get the bigger stores that are taking over all the mom and pop businesses. You don't have the mom and pop corner store anymore. You have the gas stations that are selling the chips, and you have the big mega marts that are moving in, and they're just kind of eating up, and the mom and pop can't survive against those stores because
they can't compete.
They can't compete. Yeah.
Right. Well, you know, I'm a Southern girl. I'm a farmer's daughter, and I do remember that owning land was the most valuable thing among people in rural areas. You know, if you owned land, and then you and your neighbors built your house on the land, and you planted various and sundry crops, and you sold them. They started being affected by a great many things. One is the advisors who came in and told them how to use farm equipment that cost a lot of money to purchase so that they could produce more. And then they produced more, and the prices were lower. So now they are not making enough money to cover the expenses of this new fancy farm equipment that they were persuaded to buy by this very persuasive salesman. So you had that on the one hand. Then you had the situation where you started seeing foreclosures on farms following that because people couldn't keep up with the payments, and they got liens against their land, and they lost their land. They turned up in cities looking for jobs. None of these people that we knew wanted to turn up in cities looking for jobs. They wanted to be farmers. That's what they were. That's what their ancestors had been. So they wound up in cities looking for jobs, and now they are, you know, farming part-time, if some of them are still. I do have relatives who still farm, and working in the city part-time, which is one part of that scenario. So people were driven off their land and turned into serfs and people who were laborers rather than independent people. So that's one part of the scenario. Then another part of the scenario is just what you spoke of about these large conglomerate stores, you know, coming in and underselling the mom and pop stores. You know, I used to have a mom and pop store. I know what that's like. I know what it's like not to be able to go and get a line of credit from your bank, because no matter what you offered as your collateral and your credentials, somehow you could not get a line of credit that had any longevity to it. You might be able to make a business loan for a few months. A few months is not enough for you to get a return on the investment that you have in an enterprise and be able to pay the loan off. So getting a line of credit it was difficult to impossible. So it made it necessary for you to be a cash or credit card purchaser of all the products that you needed in your store, which is very, very difficult. Believe me, it's very, very difficult. You have employees to pay, you have utilities to pay, you have rent, you have all these other things.
Yes.
So it's hard enough for a mom and pop store to just stay afloat. But then here comes this big chain sitting across the street or down the street from you, underselling, keeping longer hours because they're able to pay minimum wages to people and keep them open for extended period of time. You cannot compete. And so eventually you find that the mom and pop stores are gone, and all you have are these big corporations that you are doing business with, really at your expense, more than just paying for the goods and services, but you are paying to be dependent. You're paying not to be an entrepreneur. And I think when children don't see examples of adults owning businesses, they think about getting jobs. They're being trained in the direction of get a good education, get a good job. Well, here it is. All the examples they have are of people who work on jobs, not of people who are behind a counter, not people who are ringing up a cash register, not people who are in business for themselves. So it's very difficult to pass on the legacy of being a mom and pop store if there aren't any. Where's the example? So we are just pretty much financing dependence. We are. Because every time we spend money that in some way does not contribute to independence, it doesn't have any other category to go in. Either we're buying something that liberates us from dependency, or we are burying ourselves, digging deeper into the hole of dependency. So how do you make money work for you? That's my question. Don't sit there and smile. The smiling is not going to do it.
You know, I loved everything you just went through, and there were times I wanted to just interrupt and add something else to it, because in the course of your dialogue, you easily brought up a dozen different areas that we can basically, branch from. But I want to say this. Before I went to grad school, I lived in Indianapolis, Indiana, and I worked for a foundation. Okay, we looked for minority and women entrepreneurs, and we provided what they call seed capital financing to set them up in business. I bring that up because I know how hard it is when a person does make the decision to launch business for themselves. Especially today when things are so much more sophisticated. For example, Karen mentioned the clients put their receipts and expenses in an envelope
or in a place.
Yeah, a place and turn them in. Well, that's really interesting, because I saw that. I've been in businesses that we were providing capital to, and my job was to periodically visit the place and make an assessment as to their progress in becoming a viable business person. But so many occasions, I asked questions about the business, and they couldn't tell me critical key information. And invariably, what I found was, and I think you may know what I'm talking about, when they see their accountant or bookkeeper, they open that envelope and they just dump it out, and there's all these little receipts. I've seen that in envelopes. I've seen it in shoe boxes. I work for a not-for-profit right now, and I use accounting software. And I can tell where every penny went going back 2 or 3 years. I can tell you what every category. We can make decisions based on our experience from the past, which we've documented what pays and what doesn't pay, and we can go forward. Your average or your typical entrepreneur, just light years beyond their ability to.
You talk about record keeping.
Yeah, I'm talking about, and that's a good example, because the old days record keeping was manual and hard, but today it's done with software. But we do need to train. There just aren't. I don't think the resources. In a way, sometimes I want to say that they won. The corporations have won, because the little person starts out almost with so many things against them. And it's only the exceptional individual who decides, come hell or high water, I'm through being used, I'm through being stepped on, I'm through feeling like I'm helpless and powerless. So power has to be seized by that individual. But granted, I think the people that take that up are so rare, which might explain the statistics that you mentioned with only 10% entrepreneurs. And I want to say something else about the social engineering, because it wasn't until recently that I really understood what that meant. And Karen helped me better understand it today. But I know when I did investment banking, and we funded like public housing or subsidized housing. Well, the reason monies flew into subsidized housing was because the tax policy gave investors a tremendous shelter opportunity where their returns were maybe as much as double what you might do in traditional multifamily housing. Do you follow what I'm saying?
I'm keeping shelter. I'm keeping that word right now.
Yeah. There was an incentive for you to invest in
Low-income housing.
low-income housing. Big tax scheme, which the wealthy took advantage of, those who had capital. It fed them. Now, if we're going to rejigger tax brackets and what have you, and see, this is what makes this policy so hard to change, because fundamentally it's one, but people are only seeing their little part of it. And you can't make changes in one part without it having impacts over here. Case in point, if you rejigger tax brackets and lower them, you're going to wipe out the incentive for low-income housing. So what are you going to do? You're going to modify the law to still encourage that to the extent it's something that's desired. These are forecasts, because right now nobody knows what the final law is going to look like, once it's decided or voted upon. But yeah, social engineering is so deeply rooted in this economy.
You mentioned housing, the housing market, the housing boom. Let's explore that a little bit from the perspective that you were about to introduce.
A number of years ago, the housing market was in a slump and people weren't buying houses, and part of that had to do with the fact that the banks weren't giving anybody any loans or anything, because there's so much problems going on that the banks were looking for the people with the perfect credit and stuff. So the government stepped in and was giving first-time home buyer subsidies that you had to pay back, and that didn't work as well as they wanted to. So then they turned around a couple of years later and actually gave tax credits for up to $10,000 if you bought a new home because you're a first-time home buyer. And that's engineering how people behave through the tax code, trying to get people to buy houses, trying to get people to do different things.
There was some term that I think it may have been residuals, but that's not really what I think it is. But help me find the term, because you'll know it. When investors were buying packages where they were taking parts of houses and packaging them all together and selling them to investors at low rates, and they were then in turn able to trade them and make more money and so forth and so on. And they were doing, there was a term for this. Nobody understood it. The people who were involved in it didn't really understand the term, but they knew it made money.
Yes.
It made money. There was, I can't think of the term.
I know what you're talking about.
But the whole point was that so much of that went on that the housing market just blew up. The bubble burst when they started giving people loans that were questionable.
They were securitized.
When they started letting investors buy these investment products, which had a name that I don't know why it escapes me. But it had a name.
It was securitized lending, and if I'm a bank and per my capital, I'm allowed to lend out $100,000. That's it. You know, I'm limited by my capital. But if I had someone that could securitize every time I reach my limit, which is 100,000, I take all my mortgages and give them to him, and then I could start all over again. This person takes the mortgages and then packages them into, the term is tranches, and the tranches are divided by credit, you know, prime, AAA credit, AA, what have you. But then they found out that homes were so valuable, even people that, you know, had poor credit scores, the last thing they would allow to happen would be to lose their house. So then they began to blend them with the bottom-rated credits and blend them with the little upper. And they created a bond or a vehicle, and they sold that to the others. No one really wants to admit this. They were sold all over the world, all over the world. And the Great Recession that started in 2008 and 2009 was due to the collapse of all those certificates, which were defaulting in numbers way beyond what the mathematical models had suggested. So when you look around, we went on, you know, that's when I first came on your show with my charts. I had diagrams of the spending, and it was just like, it was a moonshot. It was something beautiful to behold, because this was an economy where people were buying like everything was almost on sale, if you can picture something like that. And yet, again, when you, relative to their incomes, it was flatlining. So you were just creating mountains and mountains and mountains of debt. And that period is all over, and now we're in the payback period. That's essentially.
So you're a good example of making money, because you decided to go into a profession that probably will outlast dirt on the planet. What made you decide to go into accounting and taxes, that line of work? Is it a family business, or you just...
Well, what's funny is the business was owned by my mother. She's still the major shareholder, but she's mostly retired. I went to college, and it was business administration, quote, unquote, not accounting.
Okay.
But I ended up doing treasurer stuff for clubs at college, and my summer jobs were things that were from friends that my mom knew, so I had some summer jobs doing accounting and bookkeeping. And then when I got out of college, I ended up in accounting departments. And then a couple of years, I'd kind of gotten to I was actually a small mom and pop company, and I couldn't go any higher in the company. I was kind of stuck as the accounting bookkeeper kind of person. Then my mom's like, you know, my business needs a little help. Why don't you come work for me? So she said she tells people that she made me work in the real world, so I'd appreciate working for her. And now she's retired, and I'm running the show. We got like 5 year-round employees, and then during tax season we add another 10 to help out with the influx of taxes.
So then I should have your mother on the show, because she can tell me why she went into it. Or do you know the story of why she decided that that was a line of business she would want to pursue?
I'm not sure what got her started in accounting. I know she was a stay-at-home mom when I was growing up. She was even in a club at school called the Mother Singers. Can you imagine this day and age getting enough mothers together to have like a 30-person choir?
Really? Okay.
But that was...
So she was a stay-at-home mom who turned into an entrepreneur?
Well, she, when us kids were in like high school, we were living in California, and California has some programs for free college education, so she decided she'd go back and finish her bachelor's, because she only finished like 2 years before she got married originally. So she went into accounting, and then she went to work for some couple different companies. And the last company she worked for, they were moving the headquarters to New Jersey, and she didn't want to move to New Jersey and leave, the Chicagoland area. So she answered an advertisement for a controller position at a company, but they really only wanted a part-time controller. So she worked out a deal with the person that she would be like an independent contractor, do their accounting and controlling a couple days a week, and the other couple days she'd work on expanding and starting an accounting business because she was doing taxes on the side for a friend, and it just kind of blossomed.
So your mother actually had the entrepreneurial spirit. She was, you know what, I think there is no substitute for initiative, because if you don't have initiative, if you're waiting for somebody to think of something for you to do, then you do wind up working for other people. But if you have initiative and you can pursue, and working for other people is not always a bad thing. I'm not trying to point
I agree.
I'm just saying that when you have initiative, you pursue goals. If people are making money all around you, my deceased husband, who was a salesman, said that everything you see has been sold to somebody by somebody. And he was a master at what he did.
Yeah.
And so you see that there are people who are making money. At one point there was a pet rock craze. There's always, every holiday, there's a new toy that everybody's buying. Or there's a new author who's written a new series of books that everybody's reading. So there are people who are making money all around us. Why is it that it doesn't occur to us that we could do that? Or some of us, not all of us, but some of us, it needs to occur to us not only that it is being done, and if it can be done, human beings can do it, and if human beings can do it, I'm human and I can do it.
I'd also add, your mother is a perfect example of not a new way, but a way of looking at things short-term versus long-term. Another aspect of family-owned businesses or entrepreneurships is that the children of the owner grow up in that environment, and I know they pray, but in many cases, that generation eventually takes over the business, like you did in your case. And should you have children, as you continue to expand, those kids may be running aspects of the business. So it's a legacy effect to entrepreneurs that over multiple generations, you've created jobs for every, subsequent birth. And that's a benefit which, to use the investment term, it capitalizes, has a great return on investment versus someone, the family that stays, I don't want to say like paint employees in a pejorative fashion, but there's no continuity. There's no possibility for continuity. Every subsequent generation has to go out and find a job. They don't have something to
it's
build on.
It's starting all over again.
Yeah,
every generation starts all over again.
Yeah.
Well, I think about the entrepreneurship as a goal that people can have. Not everybody needs to have it. I had a father-in-law who said that when you have a small business, somebody in the house needs to be making a check. He believed that there should be an employee who had a regular income, a reliable income that was coming in on a regular basis, so that you could take the risk. Now, I'm not a great one at risk. Investments that have high risks associated with it are not investments that attract my attention, because I I like, for want of a better term, I like to feel more secure.
Absolutely.
And so I know that there are people who take high risks and who make a lot of money as a result of taking high risks. They also know some who take high risks and lose money.
Your pension funds do it all the time.
So
They've got
somebody's taking high risks in your name.
Oh yeah, I mean they've done what Los Angeles was it, San Diego, somebody out in California, a number of municipalities, even Alabama, because of their being behind the performance that would be commensurate with their obligation. It always happens. You have to assume more risk. So in this case, they went into like derivatives, and I think it's already bankrupted some municipalities. But it's not the story that's so important. It's that what you see is the principle repeated over and over and over.
Mm-hmm.
When the opportunities for return are low, common sense tell you you have to increase your risk profile. And when you do that, the probability of default or it coming out bad is commensurate. Else you couldn't get a higher rate of return. You know what I'm saying?
Yeah.
People like yourself won't go into it, so they got to find people that they got to pay enough to get a person like you to do it. You see, I'm not going to invest if it's only going to give me 2%. Then when they waive 7, 8, 9%, you're going to think about that. But you also must understand you're assuming
Yes,
a higher risk.
I can be persuaded.
I'm
but
sure
it's hard.
It's human nature.
It's hard.
Yeah.
But, you know, that sort of gives me another reason why people with two incomes, you know, maybe if the one person with the income would
Amen.
allow the other
Amen.
person who has the entrepreneurial spirit
Yes.
to take that risk.
Yes.
You hold down the fort
Yes.
and let that other person take
Yes.
that risk. Maybe
Yes.
that will be worthwhile in the long
It'll
run.
pay
And
off.
if not,
Yeah.
you won't be too damaged
Yeah.
if it didn't succeed. And of course, if you can allow it to try again, because very often the first effort, as we know from our present president, how many times he bankrupted. I mean, that just was I remember at one point hearing something about he got a whole bunch of people involved in an investment and it didn't look good, so they wanted to withdraw, and they were persuaded that it would be more detrimental to them to withdraw from it than to see it through, and they did, and it succeeded. So there are risks in life, and you can't avoid them, you know, but the thing is, I think there can be such a thing as measured risk. You know, you can, I don't gamble, but I would imagine that you just didn't gamble every dollar you had. You know, maybe you just put those few dollars out there, and then if all of those were gone, you left with these few that you had back here. But I do know people who will, you know, who will gamble away everything because they believe that, you know, that they're not going to lose everything.
You know, it's interesting because it goes back to what Karen said earlier about social engineering. The United States, I'm telling you, I think parts of the way the tax code is designed, it's kind of gotten all kind of out of whack, but the idea, I think, is brilliant. For example, the incentive in this country, say like Asia, if you mess up or you fail, you know, guys commit suicide. You know, they jump on swords.
Face.
Yeah. In the United States, file bankruptcy, you'd be back in business. You know, it's okay to fail in the United States. People that know that are serial failures, they would be like Trump. Bankruptcy doesn't mean nothing. It's a convenient way of getting out so that you can start over again and move to another conquest. I think it's one of the most brilliant ideas or concepts. I'm telling you, get wiped out and start all over again. There were people who lost their home with foreclosed on. I bet that was 7 years ago. So not even 10 years have passed, and I bet they got new credit cards. They got credit card. Matter of fact, there were old stories I had of people coming out of bankruptcy court, and outside the court, they had these guys paid to give you a flyer where you can go get new credit, where you could start all over again. That's an unbelievable system. And then we got people who would rather die than go belly up. I know this is going to sound strange when I say belly up. They would rather pay. I know people when they lost jobs and they had their income dropped, they stopped feeding themselves in order to keep up their credit rating. You see that? Month after month, starving, not getting by, but being current on their bills. When the Karen's probably looking at me like I'm crazy. It says file bankruptcy and start all over again. That's okay in the United States of America.
Well, now, we said making money makes sense.
Yeah.
For me, failing isn't making sense.
Yeah.
Even if
It's
you
unacceptable to you.
Even if you could start all over again, I prefer success to failure. But I do know that there are a lot of reasons why businesses fail. For example, I know that there was a big spread in the newspaper about this chicken place in Bronzeville that was opening up, and this man had been given a small business loan, and he had this chicken recipe, and it was just going to be just the best business. What they didn't report was that he was underfinanced. They did not give him enough money. And the strange thing is, at that time, the Small Business Administration required you to give them details about the cost of operation, minute details. So they knew exactly how much money he needed in order to be able to operate this business, but they didn't give him the amount of money that he needed. They underfinanced him, and he was in trouble in less than 30 days. He was in trouble.
What's the point in doing that?
Well, the thing was that they made a big failure before the eyes of the community that he was in. In other words, you go out and get this small business loan, but then you can't succeed. So we don't need a lot of failures, as those role models are not good for the children. Mm-hmm. We don't need children to see failure as something that, because it more than often than not, it's a turnoff. It will depress initiative.
This? What about this? The company that fails and their valuation in the sale or liquidation, they receive half of what it was maybe being carried on the books for. Well, the person that purchases those assets kind of gets the ability to start a business and has equity attached to that acquisition from the start. Do you understand?
I do follow that. I wish I had a business person.
It's like a food
business person.
It's like a food
What do you
chain.
think of that?
It's like a food chain. Someone else's failure can be your blessing, and there's nothing wrong with that, because that person that failed learned a valuable lesson, and next time won't make the mistake. So you have a situation potentially where everybody wins.
So there's some value in failures.
Exactly.
Okay.
That's the whole point.
All right. You're a business person. Tell me your read on that.
Well, I got a client that was buying like scientific equipment that companies were getting rid of because they wanted the latest and greatest one, and they were going in and fixing them up and making them pretty and then selling them to like universities and maybe overseas where they didn't have access to the latest and greatest technology. Mm-hmm. And they were, buying them almost as scrap equipment and reselling them. Mm-hmm. And then the universities could afford them.
Yeah.
That was an initiative.
Yep. He had a viable
and
business.
was also seeing a value. I do know that the story that I was told by an employee of Sealy mattress company was that the founder of that company came here, and it's interesting how people can come here from other places and see needs that we walk past every day that we don't see, but he saw a need for refurbished mattresses.
Yeah.
So he went up and down alleys with a horse-drawn wagon, picking up mattresses and taking them to a garage and refurbishing them, taking the filling out and covering them again for a reasonable price.
Mm-hmm.
Hence, you got
Yes.
the place in Rosemont. That's how that grew out of it, and I knew it because I knew the person who told me the story was the employee who was in the garage doing the rehab, the refurbishing.
Sure.
So the thing is that people come, and Carter G. Woodson talks a lot about this, about making a living. He was not very fond of finding a job.
Yeah.
He always thought children should be taught to make a living.
Yeah.
And so he commented on the number of people who came here from other places and were able to see and perceive a need. They could see that this was something that was needed, and they would move to fill that need and become very wealthy, and we were here all the time, walking past it every day and never seeing, the opportunity. So we didn't see it, we didn't take advantage of it, and someone else did see and take advantage of it, and they became wealthy and hired us to work for them rather than the other way around. So
in a sense, it pays to keep people clueless, doesn't it? Do you know what I'm saying? It's like if you take the idea that the pie is only so many slices, and I can get the biggest slice to the extent I can keep other people from competing or coming into my arena. I get more of the pie for myself. It's not necessarily a perverse way of looking at it, but the incentives, those who understand how the system works, use the system to their advantage and growth. And the more people that know how it works, well, perhaps the more opportunity they potentially would stand to benefit from. But as long as you keep them closed to those kinds of ideas, it just never happens.
do you do your own taxes? I mean, your taxes for your business, you do them yourself?
I do them myself.
In-house?
In-house.
Okay. All right. Well, look at that. Here, not only is she providing a service, but she is also in the same place servicing her own needs and thereby saving a lot of money.
The payoffs are immense, aren't they? I mean,
Yeah.
But it's not all fun and games, I'm sure. But it goes with the territory. You're an adult. I mean, tax season, I know you must be working round the clock. I know you must have days where you're absolutely exhausted.
Yep, I figure if I count the time that I worked over 40 hours, I've got about 10 weeks of vacation time to take.
There you go.
Okay.
There you go.
Okay.
It's it has seasonal aspects.
Okay.
But you assume all that for the freedom it gives you and the security of providing for yourself. I really, I admire your spirit. Yeah.
Saving money. How?
It's only one way to save money.
No, don't tell me about the part where you get your paycheck, take the first 10% or something, and set it aside.
Yeah. Pay yourself first. That's the first thing I was taught in banking.
Is that true?
Yes.
That ad is true. Okay, pay yourself first.
Yes.
Put it where?
In my case, I
In a savings account? Are you kidding me? With the return on a savings account?
There you go, exactly.
Why?
It doesn't make sense, does it?
No.
Yeah, you can do a lot of other things. I could lend somebody $5, and if they pay me $8 back in a month, I've already out-earned the return I would get for putting that same amount of money in a CD for a year.
So so we want to save money where?
Well, it depends on your age and your risk tolerance.
Yes.
Okay.
So you can put money in the stock market if you're young, because if the stock market crashes and goes down, you still have time to recover your income or your money because of time. Um, you can do things like, if you have a need for life insurance already, you can do some life insurance policies that have some savings buckets inside of it, and essentially you almost get like a 5% return on your money, sort of. There's technical things about it, but you basically get the insurance policy free by saving the money inside the insurance company. And then you've got annuities that will pay more than a savings account, but at least the fixed indexed annuities don't have the down part in the stock market, so it's like a in-between ground. So there's options out
Money
there.
markets. We got 5 minutes, and I've been meaning to bring up money markets. We don't understand them. Money markets. Is that a good source of investing funds?
Mutual funds or money markets?
Both. Either. Talk to me quickly.
They're money
about
market mutual funds.
Okay,
That's a short-term, they're typically short-term investments. Whenever you say money market, you think you're talking about something with a time horizon that's not very long, probably less than 5 years.
Okay.
When you say money market.
Money market mutual funds is what then?
Mutual funds have a longer-term nature.
Essentially, a mutual fund is a stock investment company like Fidelity or American Funds. Says, okay, we know it's good to buy some of this stock and some of that stock, but an average person can't buy 100 shares of this and 100 shares of that and be diversified. So the mutual fund comes up with a plan, and they have different goals and objectives, and they buy all the stock. You put your money in, so you get kind of like a tiny share of all the parts. So you got a share of the whole pool. So your
Okay.
money's diversified, and if they manage it properly, they're watching it constantly. So when some stuff starts to go down, they'll sell it before it crashes,
Okay.
and they'll basically watch your money for it. But of course, you're paying a fee for those money managers to
Yes,
operate
yes.
that account too.
Okay.
And I'm so sorry, we're so close to the end. We never got the chance to talk about insurance, but that's certainly a viable strategy.
Insurance
in the
is
event
fine.
of life and some kind of a disruption, you have a source that can fund the continuity of the plans that you had for yourself or your family. I think insurance is a great vehicle
Well,
to
someone
consider.
was asking me about getting an insurance policy where if you died, the house was paid off.
That's a reverse mortgage?
No,
No.
if you died, the proceeds from the insurance policy would pay off the house. It was a mortgage policy or something of that sort.
Okay.
My feeling is
So
that you take out enough insurance that if the person who is the beneficiary wants to pay off the house with the money,
Sure.
then
Sure.
they can pay it off if they decide to sell the house and use that money for something else. I don't like insurance that's tailored to you pay these premiums until you die, and then it can be used for only this one purpose.
But there's a universe of insurance products out there, and it helps if
Are we
you.
going to have another show, you
Yeah,
think?
insurance. I think
That's a whole-
I'm really
Oh,
in
my
for
goodness
insurance.
gracious,
I
I just
am. I
opened
really.
up
I
another-
can't. I could tell you stories where lives were literally preserved to go on simply by virtue of the person having, made
Okay,
the choice.
well, folks,
Insurance is an excellent program.
I have to tell you, we did our best. We tried.
We
We
did.
tried to touch on everything. We tried to give it as much attention as we thought we could do, but obviously we left some stuff undone. So we'll come back another time. I don't know exactly when, but thank you for watching us, and I want to thank you, Karen Eberhardt Miller, and I want to thank you, Ray Akins, for being my guest. And I certainly appreciate all that you have contributed to this show. And I hope that I made enough sense to make my own money make sense.
Good discussion.